Hello and welcome to live programming here at the More Freedom Foundation. Today we're going to be discussing the implosion of the Silicon Valley Bank as well as some other banks and what the broader geopolitical significance of this is. A lot of folks in the United States are outraged that some of, honestly, the worst people in the country have been given a free handout here. I think what folks aren't focusing on, aren't paying enough attention to, is the fact that it's not just a bunch of really unattractive PayPal mafia, Silicon Valley venture capitalists that have been bailed out here. It's also Saudi Arabia. We'll be talking about that in detail as we get going. If you guys could let me know whether I'm coming through okay in the chat, that would be great. Before we get started, a few ground rules. If you are new here, we have very open rules as to what you can say in the chat. You are more than welcome to savage my ideas, my appearance, my character. Say whatever you want about me. You're more than welcome to do so. What we do ask is that you be civil to each other in the comments. We allow a very wide range of discussion. You can say pretty much whatever you want, as long as it's not too genocidal, I guess. But what we don't accept is attacking other people in the chat in personal terms, or disrupting the chat more generally. So don't just start, spamming the chat list. Don't start trying to attack other members of the chat for their personality. I don't have the bandwidth to pay attention to presenting what I want to present today and policing the chat, and that's why I have Loga Cool Extreme, who is the moderator. There is no appeal from the Church of Loga. If you're doing something that he finds inappropriate, he will warn you. He will warn you once. And if you do not stop whatever your behavior is, he will ban you for all time. There is no appeal from the Court of Loga, so listen to what he says. Going forward, I guess that's what I have to say before we get started. So what this is about fundamentally is Federal Reserve actions. I've been thinking a lot recently about just how I don't know enough about the Federal Reserve, what it does, what it is, and it's definitely something that I want to make a focus going forward. Just because it's incredibly important. It's probably the most powerful institution on the planet. I guess the White House can do more day to day. According to the Constitution, the U.S. Congress should be doing a lot more day to day. But the U.S. Congress has given up a lot of that power just in the name of petty infighting and honestly the past 40 years of pretending that Congress doesn't have power to do things and that everything should be left to banking and finance and business. The Federal Reserve has extraordinary powers, and because of two massive financial crises this century, the 2008 Great Financial Crisis and the 2020 COVID crisis, the Federal Reserve has dramatically expanded its powers. It is, in a very real sense, the hard edge of U.S. empire. The control that it has over absolutely everything in the world is noticed by some, but very rarely explained or theorized about. Mostly, I believe, because it's just so damn complicated, as I'm afraid this presentation will indicate. But fundamentally, what happened was, on Thursday, a bunch of folks in a WhatsApp of Silicon Valley founders, these are folks who found startup companies, started talking about how Silicon Valley Bank wasn't trustworthy. Silicon Valley Bank was a 40-year-old institution that focused on providing services to these sorts of clients. Silicon Valley venture capitalists and the startup companies that those venture capitalists fund. So a WhatsApp group on Thursday decided, I'm not sure if it was WhatsApp in particular, decided that Silicon Valley Bank was probably not viable. They started a run on deposits, and by Sunday, we had to have interventions by the most powerful institution on the planet, the Federal Reserve, the Department of Treasury, and by Monday morning, we had the President of the United States needing to make somewhat rushed speeches about how the U.S. banking system was okay. This is a very, very big deal. I have put Saudi Arabia in the title to help me with SEO, but I think Saudi Arabia absolutely does tie into this in important ways. The rise and fall of the tech industry ties into this in very important ways. But fundamentally, this is a story about the Federal Reserve. And I hope you guys will let me know whether I'm making this make any sense or not. So, what has happened? What has the Federal Reserve done over the past 20 years? This is the most important tool, by no means the only tool of the Federal Reserve. It is the Federal Reserve's ability to set interest rates. They, I believe, technically set interest rates for funds that the U.S. government borrows, but this setting of those interest rates, I have read a very long and complicated thread on how they did that. I still don't understand it and wouldn't be able to tell you, but essentially every couple of months or so, I think it's every month. I think it's every month. The Federal Reserve announces what they intend the federal interest rates to be. When they do this, this is not limited to federal securities. This provides usually the baseline, the ground floor of what interest rates are everywhere. In part, this is because the federal debt, the U.S. federal debt, is the largest debt market in the world. So if you can go to the U.S. federal government and lend money to them and get bonds from them at that certain rate, everybody assumes, I think fairly or unfairly, that the U.S. federal government is good for it. So that rate becomes the baseline. Anybody else in the world who wants to borrow money has to borrow money at a higher interest rate. So this is one of the most important numbers in the world economy, is what the federal funds effective rate is. Now, since 2008, you can see it's that gray band in the middle there. Since 2008, this interest rate has, for most of the time since 2008, been effectively zero. This is fascinating. The ramifying effects it has had on the world economy for the past 10, 15 years have been stunning. So when the Federal Reserve is essentially offering no money, is setting the interest rates at essentially no money. If you lend money to the federal government, if you buy these treasury instruments, you get no money in return. What that has meant is that a whole bunch of people who would have been content to just lend their money to the federal government and get their almost guaranteed, 2 to 3%, they're not content to get 0% or get less money than inflation. So for the past 15 years, money has just been desperately looking for any kind of return. All the money. We're talking about banks internationally. We're talking about wealthy individuals. We're talking about individual folks who noticed that their checking account or savings account that my first savings account I opened in 1988, and I got 18% interest from the bank for putting my allowance money into that bank account. Individual folks over the past 15 years have noticed that they don't actually make any money by leaving their money with a bank, or it's like this the incredibly small amount of interest that a bank would pay. So everybody has been desperately looking for ways to make more money, and that has led to a lot of insanity. The most insane place has been the tech industry in the United States. Essentially, a vast, incredibly wealthy industry that hasn't really had to show profits or produce anything over the past 20 years or 15 years since the 2008 financial crisis. It has provided a bunch of services that people have found useful. It's an open question how many of these services are actually viable. Famously, Uber and Lyft are ride-hailing companies, really transformed life in urban environments and actually suburban environments as well across the United States and across the world. But these companies have never actually made any money because it's not really a viable business. It's too competitive. they've been able to continue, and they've been able to drive most taxi cab entrepreneurs out of business because of money provided by wealthy people all over the world. The most wealthy of these people would, of course, be MBS, Saudi Arabia. This picture goes back to 2016, where one of the most egregious, one of the most absurd investments in world history, I think, would probably be SoftBank's Vision Fund. This is $100 billion fund that was put together. I mean, that is a lot of money. I know that dealing with geopolitics, we look at a lot of big numbers. You look at Belt and Road, that does $100 billion. That doesn't seem like that much money. But you have to understand that a lot of the figures we talk about in geopolitics, specifically with relation to China, is not real money. It's not, it's like, oh, there's a promised $400 billion deal with Iran. There's a promised $250 billion here or there. It's not there. This is $100 billion that was put together and deployed privately. That $100 billion served to expand and accelerate or prolong this massive, massive tech bubble that wasn't making a ton of sense and honestly was beginning to fall a little bit because during the Trump administration, we did have a Federal Reserve that was trying to raise interest rates. So in 2016, 2017, Saudi Arabia and Masayoshi Son, the head of SoftBank, come barreling into the tech industry and just throwing money everywhere. Now, if you look at the Vision Fund portfolio, there is, I am certain that if you connected the portfolio to the venture capitalists, to the Silicon Valley Bank set of depositors, I am very confident that there is overlap there. But if you look at the actual Vision Fund portfolio, it's only a couple dozen companies. So these companies, I looked a little bit, I don't know if they were actual depositors in Silicon Valley Bank, but if you consider the market as a whole, the effect that SoftBank and Saudi Arabia coming barreling in with this $100 billion in 2017, it raised all boats. It made every investment in this arena more expensive, more attractive, and just helped everybody in Silicon Valley. Not just in Silicon Valley, the Vision Fund also purchases Chinese tech companies, Indian tech companies, European tech companies, everything. It just helped the money spin faster. But what it also did was it made Saudi Arabia tremendously dependent on this technology industry. This amount of money, so the $100 billion was not entirely from Saudi Arabia. The UAE was in there. There were also a range of other investors. SoftBank itself put in, I think, $18 billion. But Saudi Arabia's chunk of the $100 billion Vision Fund was $45 billion. And that's only what they put in the Vision Fund. MBS, Saudi Arabia more generally, is famously heavily committed to the technology sector. I think it's fairly well known that in Elon Musk's purchase of Twitter, Saudi Arabia, sorry about the siren, Saudi Arabia was a big component of, or Saudi Arabian money, I think that was through Talaweed, what have been Talal or what have you. Saudi money was a big part of the Twitter purchase. That's completely aside from this this Vision Fund investment. So that $45 billion that Saudi Arabia put into the Vision Fund, again, we're not dealing with Chinese fantasies. We're not dealing with the U.S. budget. We're dealing with Saudi Arabia, which is a very wealthy country. But $45 billion is a significant amount of money for Saudi Arabia. And again, this is not the full extent of their exposure to the U.S. technology industry. That $45 billion, I looked at a couple comparative deals. In 2021, I think Saudi Aramco's revenue was $350 billion. In 2019, their profit, Saudi Aramco, this is Saudi Aramco, this is the state oil and gas company, or maybe it's just the oil company, I'm not sure, of Saudi Arabia. The vast majority of the money that goes to the Saudi government, that funds the Saudi government, comes from Saudi Aramco. In 2019, so more or less in the last sort of normal-ish year, Saudi Aramco had $100 billion in profits. That mostly goes to the Saudi government to maintain the Saudi government's ongoing activities. 45 billion, so that's half, just for this one vision fund, which is some fraction of the Saudi exposure to the tech industry. Half of the yearly operating funds of the Saudi government were donated to the U.S. and world tech industry and keeping the party going and keeping the party going well. This was actually somewhat rewarded in 2020 when, because of COVID, in 2020, interest rates again fell down to zero. And when interest rates fall to zero, technology companies, speculative companies, utter bullshit like crypto goes through the roof because people just desperately want to find somewhere to make money. And all the traditional places where you make money, like loaning to governments, don't actually pay you any money anymore. So that went rather well. And then, and this is where things get a little crazy, is I think it was actually March of 2022 when the Federal Reserve started seriously hiking. And you can see this line, this sort of hockey stick here on interest rates. And that hockey stick comes at the end of 20 years where, not 20, but it comes at the end of 14 years where the expectation was that interest rates would be around zero. This was something that was lamented. This is amusingly lamented by a lot of tech founders and crypto people. Crypto was supposedly going to be this big, helpful inflation hedge, and the Fed was spending too much money, and the Fed was giving everyone too easy a time with these 0% interest rates. So they were they were talking about how Bitcoin was so much better than this. And the assumption, this is an assumption that was sort of backed up by the Federal Reserve's actions in during the Trump administration, is the economy was going so well during the Trump administration that the Federal Reserve decided finally we can begin to raise interest rates again. And they got to about 2.5 or thereabouts in the beginning of 2019, and then they concluded that actually no, we're slowing the economy down too much, so we've got to start going down again. And they did. They found a level at about 1.5% there that they seemed like they would be happy with, but that was still incredibly low by historical terms. So yeah. Interest rates were, now I'm confusing myself a little bit here. Interest rates were just assumed that we'd never be able to go up above 1%, and this was of course confirmed when COVID came around. A new crisis happened, and rates crashed down to zero, where they sat until March of 2022. What happened in March of 2022 is that inflation, something that had been seen as more or less a dead letter since the aughts, or if not really even since the 1970s, inflation started to really bite. And the Federal Reserve decided we're going to deal with this. A lot of Wall Street, a lot of the technology folks who were bailed out here still assumed that the Federal Reserve didn't have the balls, essentially, that something would go wrong and then the Federal Reserve would quickly back down and that interest rates would get low again, and that would be it, because everyone had just sort of assumed, because of the past 14 years of experience, that the Federal Reserve was incapable of raising rates in a serious way. This is where we were a year ago. It's now a year later, and the Federal Reserve has been raising rates at a really fast rate. Now I'm sorry, this all must have seemed rather boring, but it's incredibly important. Arguably, this is the most important factor in geopolitics today. if the Federal Reserve is paying you 5% for your money, it's now a good investment. This is not just a good investment in the United States. This is a good investment for everybody all over the world. This has some really intense ramifications for the U.S. budget deficit. A lot more of the U.S. taxpayers' money is going to go to paying these higher interest rates. That's going to have really big effects. That's probably what's eventually going to force rates down to some extent. But this changes everything. This means that every government in the world who wants to be invested in now has to compete with the treasury market. But it's not just the governments. It's also every bank in the world. And that was very key to the failing of Silicon Valley Bank and potentially other banks, is that it's sort of like with gas prices. When the price of a barrel of oil goes up, your gas station very quickly goes up. But when the price of oil comes back down, the gas station takes its sweet time bringing the price of the consumer price of petrol down. And it's has been the same experience with a lot of commercial banks. Interest rates have been rising over the past year, but you may not have found in your checking account or your savings account that your bank was giving you these interest rates, mostly because they want to pay you less as long as they can get away with it. One of the many factors in the fall of Silicon Valley Bank last week is that people are beginning to not get away with that. And a lot of people, from very wealthy people to foreign countries to just mom and pop Joe consumer, are realizing, hey, what the hell? I can get 5%. And for the past year, stocks haven't been that impressive. I can get 5% a year by loaning to the federal government now. I'm just going to do that, and are pulling money out of their savings accounts. And if they do that, it makes banks more shaky. That's, of course, just one factor, one aspect. But the one thing I want to point out is just how geopolitically important this is everywhere. Sri Lanka already defaulted on its debt before the hiking process started last year. But Ghana's debt default is in part a result of this Federal Reserve action. One of the great era of debt defaults, the great financial crises for Latin America and Africa, are the 1980s, because of a very similar process called the Volcker shock. The Volcker shock was actually, sadly, maybe I didn't do a longer term version, but the Volcker shock makes this hockey stick look minor by comparison. I believe this is showing, we're probably going to crest 5% for the federal funds rate at some point in the coming months. I believe it was close to 18% with Volcker. So after a very permissive 1960s, 1970s, a bunch of Latin American and African countries took on a bunch of debt. And then, because inflation was out of control in the United States and elsewhere, the Federal Reserve chair appointed by Jimmy Carter, Paul Volcker, jacked up interest rates massively, created a massive worldwide recession, and meant that whenever a developing country had to go back and roll over its debts, borrow more money, instead of being able to borrow money at 2%, they had to borrow money at like 18 to 25%. And that absolutely crushed the economies of most of Africa and Latin America. We're beginning to see that happen now. Already in, I believe, October of last year, you had the United Nations coming out and saying, oh my gosh, please stop, essentially begging that the Federal Reserve stop raising rates. The Federal Reserve is not going to do that. The Federal Reserve is going to continue raising rates until they've managed to crush inflation worldwide, in the United States specifically, but worldwide. If they get incredible consequences in terms of unemployment, in terms of crashing the economy, they will slow down, but they will slow down not because they've crashed the economy or brought about unemployment. It's because those conditions will bring down inflation. Crashing the economy is one way to end inflation, and that seems to be what the Federal Reserve wants to do. We're in a strange set of circumstances in the United States where economic strength, economic growth and viability in the United States is so impressive, is so nonstop, that the Federal Reserve is able to do this. That was the concern for all of these years, was that the U.S. economy was simply too fragile and that the United States couldn't possibly raise these interest rates without creating serious damage to the U.S. economy. That is not happening. Over the past week, we have seen high inflation. I think that might have been just today. Inflation had looked high for a while, and then it looked like it was slowing down, and now it looks like it's speeding up again, which is not good. And we have this incredible job market with 3% unemployment. If we've got 3% unemployment, it means that it's harder to find people to work for you, and you have to pay them more, which is inflation. So yeah, it's this very strange set of circumstances, which is amazing from the U.S. perspective, because we had, for decades, we had just assumed that you couldn't bring about real interest rates again. You couldn't have a real economy. And this is where a lot of the crypto stuff comes from. This is where a lot of the classical economics anger at how things have been going for the past 20 years has come from, is the fact that it is ridiculous that the United States could just continue to borrow money and not give people anything in return for borrowing that money. That is over. We have real interest rates for the first time in 15 years, and the U.S. economy, which was supposed to pancake because of this, it just continues to accelerate. So it's a weird problem. It's a great problem for the United States. It is a terrible problem for everybody else, because everybody else has to follow the Federal Reserve's Federal Reserve's model here. So yeah, we've got Ghana defaulting. You might recall the incredibly humiliating time as Prime Minister for Liz Truss back in it was the last fall. Very quickly was turfed out when a proposed set of tax cuts crashed the British currency. That has a lot to do with the Fed. What's going on now is that basically the plan of the Federal Reserve is to break things, is to break the world economy in ways that crush inflation. It's really grim, and it's gonna continue. So what finally happened was we got a serious breakage in the United States financial system last Thursday. That is the Silicon Valley Bank. Now, to be clear, Saudi Arabia's investment and the investment of all manner of other tech investors got absolutely crushed, has been in the process of being absolutely crushed for a year and a half now. I think November 2021, if I recall correctly, was the absolute peak. You know, Tesla shares were $600. Now they're like $180. The crypto Bitcoin topped out at like $65,000. Now it's $20,000. That was the absolute peak. November 2021, things just sort of the wheels began to fall off of all of that. And then in March, the Federal Reserve started hiking. And yeah, I mean, Tesla and Bitcoin are extreme examples of losing 2/3 of their value. But the entire tech industry, they're not actually that extreme examples. Those are extreme examples among sort of household names. The entire tech industry, Meta, that's the company that owns Facebook, Alphabet, the company that owns Google, Amazon, even Apple. I think Apple's probably the one that's held up value the most, has lost like 40% of its value over the past 2 years. Most big tech companies have lost 50% of their value. And in smaller companies, it's been an absolute bloodbath. You may recall a couple years back, I made a video talking about SPACs, special purpose acquisition companies, and how absolutely worthless they were. Those have mostly all exploded. They're now mostly worthless. So the tech industry has been going through this really, really bad time. I was looked at the Wikipedia article for SoftBank, not a great source, obviously, but looked at the Wikipedia article for SoftBank this morning, and in the first initial paragraph, the dismal results of these investment funds. So Saudi Arabia's already lost a tremendous amount of money in tech. All manner of investors have lost a tremendous amount of money in tech. And to some extent, this is a good thing. This is a great thing, in fact. These are some of the most privileged people in the world and also the U.S. economy. And to see their investments tanking while a lot of folks in the lower echelons of the U.S. economy, people who actually work for a living rather than just sort of jockey spreadsheets, folks who essential workers, this, that, and the other thing, are actually doing pretty well, are actually doing great. So this is honestly the ideal way to attempt to crush inflation, to sort of push ridiculousness out of the market. It's a running joke on Twitter and elsewhere that whenever we hear about some tech development that would have been quite normal 2 or 3 years ago, some cryptocurrency doing particularly well, some merger, some bit of conspicuous consumption, it's like, Powell's got to hike. The Federal Reserve chair, it's got to jack up interest rates more because this shouldn't be happening anymore. So it's actually, there are worse ways for this to happen, and it's actually been quite surprising. I think one of the main motivating reasons why people didn't believe that the Federal Reserve could maintain high interest rates, one of it was, political pressure around unemployment, but the Federal Reserve as an institution is pretty good at ignoring pressure around unemployment. What was probably a bigger factor in this sort of chickening out between 2017 and 2019 was a bigger factor back then is the fact that people on the Federal Reserve are mostly wealthy people and their own investments were suffering here. And that's why they sort of chickened out there. So it's actually been, has built some respect on my part for Jerome Powell and the current set of governors of the Federal Reserve, that they're willing to just sort of deflate the stock markets in ways that folks weren't expecting. And I think that respect has significantly diminished after the events of the past 3 or 4 days. I go back and forth on this. I do think that the 2008 bailouts were probably necessary. The fact that they were probably necessary does not mean that they shouldn't outrage people. The fact that I think it's I've seen it attributed to a lot of people recently. Most recently saw it attributed to Martin Luther King. Famously, everybody attributes everything to Martin Luther King, so this is probably wrong, but it might have been a Martin Luther King quote that the United States famously has a policy of brutal, hard-edged capitalism for the poor and socialism for the rich. And we definitely in 2008 saw socialism for the rich and hard-edged capitalism for the poor. So while I think the bailouts in 2008 were probably necessary, there also should have been more done for folks who were losing their houses, for other folks in the economy who hadn't, created the problem, as the Wall Street financiers who were bailed out had done. What we're seeing, what we saw this weekend is a much smaller set of indicators. And you know what? Like the Department of the Treasury, the Federal Reserve, these are some of the last people, in policy circles who are not idiots. I mean, they do know what's up. They do important work. So maybe what they were seeing on Saturday made these bailouts appropriate. But wow, does it stick in my craw? Wow, does it stick it should stick in everybody's craw. What happened here. The fact that the Republicans have now been allowed to delay student debt relief, minor, caveated, very careful, only for certain people who benefited from certain things and only to a certain extent of money. The Republicans have been allowed to hold up student debt relief for these folks for like a year now in the courts, yet in just a weekend, some of the wealthiest people on the planet, including Saudi Arabia, are bailed out by the Federal Reserve and the Treasury Department. Okay, so Silicon Valley Bank is a very special kind of bank. It's about 40 years old, had crafted a business of catering to venture capitalists and their portfolios of startup companies. There are unicorns. You've heard of unicorns, right? These are private companies that are worth $1 billion. These have proliferated over the past decade. I'm not saying that all the folks who are banking at Silicon Valley Bank were unicorns. I'm just talking about this sort of large ecosystem that had built up. And by all accounts, Silicon Valley Bank was very, very good at catering to this ecosystem, had strong relationships with venture capitalists, with the often financially unsophisticated, very young entrepreneurs at all these startup companies. And they were successful for a very long time, and I guess what sort of sowed the seeds of their defeat, the failure of this bank, was how incredibly successful Silicon Valley Bank was in 2020, 2021. What happened there is the interest rates crashed right back down to zero because of COVID, and we saw this extraordinary amount of money and investment and an interest flowing into a lot of Silicon Valley companies, some of which were great and some of which were entirely worthless. I'm speaking about the entirely worthless is a lot of the crypto stuff, a lot of the Web3 nonsense. Everything got funded, and a lot of those startup companies that got funded deposited all their money at Silicon Valley Bank. There's a lot of incredible irresponsibility here. I've been speaking with some finance professionals over the weekend. I've been seeing what they say on Twitter, and they're just gobsmacked at how bad not just Silicon Valley Bank was at managing their risk, but at how bad the individual startups were at managing their money. You should never have millions of dollars in a bank account. Nobody should ever have millions of dollars in a banking account. The biggest companies in the world don't have, well, the biggest companies in the world probably do have millions of dollars in a bank account, but it's probably only tens of millions and for a given purpose. If you have those amounts of money, you should be buying certain kinds of securities, probably debt securities, something very secure. You shouldn't just have it sitting there in cash. This is a key factor in the events of the past couple days. In the United States, because of a New Deal piece of regulation, this is FDR back in the 1940s, we have the FDIC, the Federal Deposit Insurance Corporation, that guarantees all bank deposits up to $250,000. So if your bank goes kaput and you have less than $250,000 in your bank account, it doesn't matter. You're fine. So regardless of what the federal government would have done, because of already existing regulation, everybody who had a bank account at Silicon Valley Bank was going to get at least $250,000 back. And none of these companies, especially these startup companies, should have ever had more than $250,000 worth of cash. If they got a big deal where they got like a $10 million check from a venture capitalist or a consortium of venture capitalists, they should have bought $9 million worth of some kind of very secure money market fund, treasury securities, what have you, so you could earn some percentage on that money, not just having it sit there at cash. And crucially, if you buy a bundle of securities, something that Silicon Valley Bank certainly offered, you can you own those securities. You're better protected than FDIC protection because certainly a bank Silicon Valley's size, they wouldn't be the depository institution. They would just manage it for you. So you would not lose your money. So incredible, incredible stupidity. These are supposedly the smartest people on the planet, Silicon Valley folks. Really, both in Silicon Valley Bank itself and in the founding companies, which, okay, maybe, you've got an idea, you don't necessarily know everything about finance, but certainly the venture capitalists that are supposed to be the savvy capitalists steering these new companies, just incredible idiocy, incredible misunderstanding of what's going on here. Some of it is incredible idiocy, really poor management. But this fundamental problem for the Silicon Valley Bank is how successful they were in 2021, 2022. So they got a whole bunch of money in this little window here where interest rates were zero. They got all of this money and they had to make their own investments. They had to decide what to do with folks' deposits. They had to do all manner of things. And what they did was they bought a lot of Treasury securities. This is a normal thing to do. Parts of it are actually government mandated for certain banks. You have to buy a certain pile of debt securities. But what you should also do, I'm not too familiar with the intricacies of this, but you should also hedge that in some way. There is a vast derivatives industry around providing mechanisms that protect you as a bank if you have a lot of your capital wrapped up in a certain kind of security. You can buy hedges, you can buy things that deal with your risk. Silicon Valley Bank apparently did not have a risk officer for a lot of the past year and did not purchase any of that appropriate kinds of insurance or derivatives or other mechanisms that would have protected them. So what happened is they had these big chunks of debt, government debt, purchased at like 1%, 1.5%, what have you, or less than that. What happens, and this is something I barely understand, but what happens is if you have a big chunk of government bonds that pay 1.5%, and then the US government starts issuing debt that pays 3%, 4%, 5%, which is what has happened over the past 5 years, past years, we've gone up that hockey stick there. The debt you already own that is with 1.5, 1.2% becomes worth less, not worthless. It just becomes worth less. I think that the sense that I got is that they're worth about 85%. All the stuff they bought in 2020, 2021 is worth about 85% of what they had initially purchased it for. So this is what you might have seen a lot of folks talking about unrealized losses. This is a lot of scary graphs about unrealized losses in the banking system more generally. That's what this is. This is a problem that lots of banks are dealing with. And this is one of the main arguments that the Federal Reserve's actions on Sunday were appropriate. Not saying you shouldn't be angry about them, because you really should be angry about what's given to the richest mistake makers in the economy. But it may have been appropriate, because if every bank in the country has this problem, which is debatable because other banks have risk officers and know how to purchase hedges against these issues, then this could be a systemic problem. So there are capital requirements for banks. There were lower capital requirements for Silicon Valley Bank because they had lobbied around that. I'm not sure if there are specifically lower capital requirements, but there were lower regulatory burdens around Silicon Valley Bank because it was smaller, put in place in 2018. But they had a huge chunk, tens of billions of dollars, of this debt that wasn't so great anymore. So that blew a hole in their balance sheet that they had to cover. So far, so normal. They were taking steps to deal with that. They sold off a lot of this stuff, took a big loss on it, and decided to raise some money to deal with all this money that they had lost. And then we had a bunch of venture capitalists in a WhatsApp. Supposedly on Thursday. This is becoming a bit apocryphal. There are other factors here. The Silicon Valley Bank was distressed and was having trouble for months. But the huge difference, the huge shift that took place was, and what makes Silicon Valley Bank different from any other bank in the country, is that it was sort of the pet bank of these venture capitalists. So the venture capitalists are incredibly wealthy people who use their own money, take the money of folks like SoftBank, Masayoshi Son, and Saudi Arabia, both through the SoftBank Vision Fund and other avenues, take that money and deploy it to build the future. Unfortunately, over the past decade of 0% interest rates, I've seen a lot of angry tweets on this. They seem to have mostly figured out better ways to gamble, put together a bunch of crypto nonsense, and figured out how to put large sectors of the economy under sort of gig economy peonage, a sort of new serfdom. I think it's pretty natural to not be very impressed with what Silicon Valley has produced over the past 15 years. Arguably because our expectations were way too high. They were supposed to bring us the millennium, the new shiny future, and they mostly brought us apps, crappy apps and ways to swindle each other. Which makes sense because there's a limit to what business can do. You need government for a wide range of things. There's a great clip of Charlie Munger, sort of Warren Buffett's right-hand man, talking about how Warren Buffett and Amazon and Citibank, was it Citibank? No, JP Morgan, got together and tried to solve healthcare a couple years back, and they were utterly defeated by it because business can't solve everything, and it's ridiculous that we expected Silicon Valley to solve everything. They can do a lot of things. They can do a lot of interesting things. One of the saddest things about Silicon Valley Bank is that they were also funding a lot of startups in biotech. And while it now seems that all of those companies will be safe, they have not lost their banking privileges or their deposits, it is probably going to be a more hostile environment for funding startups that could be providing cancer cures. Cancer cures are things that exist for certain kinds of cancer. Silicon Valley Bank did fund that. So I'm not saying that Silicon Valley is terribly and entirely a waste of time. I am, however, very angry at the venture capitalists that decided to just go ahead and start a bank run on their own bank. And create actively. There are certain bad actors. I think we shouldn't let the loud voices of some fairly disgusting folks like David Sachs or Jason Kalala, whatever, or Badgelis, I don't know, a lot of really loud Twitter folks. We shouldn't tar all of venture capital with that same brush, but these are certainly the loudest aspects of Peter Thiel. This is another institution that you can put on another notch on Peter Thiel's fighter jet or what have you. Peter Thiel, I think on Thursday, basically told all his portfolio companies that they should pull out of Silicon Valley Bank, and the institution was killed. So there were fundamental problems at Silicon Valley Bank. I haven't seen actually any allegations of fraud at this point. I think it's just they were dumb. They just did not know what they were doing, and they had actively worked during the Trump administration, actively worked and successfully gotten regulations lifted that allowed them to do even dumber things. I don't think there's any allegations of fraud, however. This is just they got caught out. And the problem was that all of their depositors, a significant amount of their depositors, were over the $250,000 limit and were all talking to each other and were able to, it's just an extraordinary progression. I probably mentioned this before, but to go from a WhatsApp group of like 200 rich guys on Thursday to a banking crisis large enough that the President of the United States had to address the country on Monday morning is quite something. So Silicon Valley Bank was pretty clear by the end of Friday. I think the FDIC was already there. This is standard. I've been learning a lot about the FDIC over the past weekend. It's an incredible institution. Government actually can do things and do things very well. When a bank fails in the United States, anybody who's got under $250,000 deposited in that bank is safe. They are taken care of by the FDIC that takes over that bank. And over the course, they typically like to do it on a Friday afternoon if they can. But even if they have to come in on a Wednesday, they will come in, do an accounting, and open that bank that physical bank branch, which is becoming less important, but they will do that. They will open that physical bank branch the next day and service every depositor of under $250,000. And this was already the case, which makes sort of Sunday's actions even more frustrating. The chances are very good. Silicon Valley Bank was not, this is not an FTX situation where there's no rules in crypto and these guys were just straight up stealing everybody's money and funneling it to themselves into their own investments and, you know, a Ponzi scheme horseshit. There actually are enough high value assets left in the Silicon Valley Bank balance sheet that not only this is before the bailout. Not only would everybody get their $250,000, the chances were pretty high that most depositors would be made whole anyway. Even some of the people who own debt, that's how it works. When a bank fails, depositors are most senior. Then you have the debt securities owners, people who had loaned money to the bank, and then you have equity. Equity remains wiped out. I'm not certain if all the bondholders are getting wiped out. So depositors were probably going to be made whole anyway. What was I talking about? Anyway, so that's what we found out Friday afternoon. Then a bunch of other banks, including my own, I should probably disclose that. First Republic is a bank, does a lot of business with my family. And it was looking like the most likely next bank to fail. And there was a whole class of regional banks. What's interesting about Dodd-Frank, something I've complained about in the past, Dodd-Frank is the pack of legislations. It's one big law, but oh boy, does it do a million things. I think it came out in 2010, was meant to safeguard the banking industry against another 2008. And I, as a sort of right-leaning type, genially hated the Dodd-Frank and, it does all these terrible things and it's such a mess. And then in 2020, we had absolutely unprecedented crisis, extraordinary economic disruption, and the U.S. banking system was rock solid with incredible efforts by the Federal Reserve. Let's not discount that, but U.S. banking, and by extension, because now everything's tied in together, world banking was fine. And when you consider the depths of financial and banking crises that we had to deal with in 2008 and how bad they were, it's pretty stunning. So Dodd-Frank created sort of separate classes. I mean, these classes already existed, but separate legal classes of banks. Certain banks are large enough and systemically important enough that they are subject to stress tests, to this, that, and the other thing, have stringent capital requirements, they living wills. I mean, there's just a million different things for too big to fail banks. The banks that were looking in serious danger on Friday are banks like Silicon Valley Bank, like First Republic, like Signature Bank, which also failed. These are banks that are above the too big to fail class, below the too big to fail classification, and thanks to some regulatory changes heavily pushed for by Silicon Valley Bank under the Trump administration in 2018 or so, was not subject to as much scrutiny and regulatory restrictions. And we're in serious danger. And on Friday, it looked like a lot of regional banks across the country were going to fail, and we were going to have cascading bank failures, including one of my banks, which would not have been great. So it was an insane weekend of following what the hell is going to happen, what the hell is happening here. And on Sunday evening, I was watching the Oscars at a movie theater in Brooklyn, and the news came across Twitter that the Federal Reserve and the Treasury Department and the FDIC, not typically considered in that august company as the Federal Reserve, but a very important, it's the organization that wraps up banks, had laid out a series of actions, one of which was guaranteeing deposits for the banks that they were rolling up. Silicon Valley Bank and Signature Bank, a much smaller New York-based bank that has a much more straightforward story. They opted to be one of the big crypto banks and lost their shirt on a bunch of Ponzi scheme dog shit. So shouldn't have any sympathy for them. But all of their deposits were guaranteed as well under the systemic risk exception. I don't know what that means, but I saw it on Twitter, so I'll relay it to you. And most importantly, they've put together a new funding facility that deals with this problem that is First Republic has, that a lot of other banks have, where that problem I described, where because the interest rates went up, the bonds that they hold that they purchased in 2020 and 2021 are worth less. They're worth 85% of what they were because of. So yeah, there's now this new funding facility. It's just a new set of loans that values those bonds at par, which means that even though the market says those bonds are worth 85%, they're worth 100%. So this is another shift towards socialism, for sure. Once again, it's socialism for the rich. I'm pretty biased. First Republic is a bank that I like, that I use, and it probably would have gone out of business on Monday. I did a lot of checking a very panicked checking on Friday morning. My family's assets would have been fine, but I'm glad that the bank was saved, but I'm also cognizant of just how incredibly unjust this is. And yes, Saudi Arabia is 100% bailed out by this bailout as well, because if you're talking about causes of inflation, the whole tech industry and its excesses and the amounts of money that they shovel towards everybody and everything and how they make luxury goods more expensive, that is an incredible source of worldwide inflation. And actually, if the Federal Reserve wanted to get some more of that just sort of immaculate disinflation, some more of that crushing of the economy that only hurts the rich, then and the thing is, before this bailout, there would not even have been, most of the depositors would have gotten their money anyway. All of that stuff, I retweeted some of it incorrectly. All of that stuff about how, the startups aren't going to be able to pay their people next week, that's probably largely bullshit. They would have had instant access to $250,000, every person who held an account, and by the end of the day on Monday, they would have had a lot of money beyond that. And it's just really, really absurd that we have decided that all of these startups and the entire tech industry had to get bailed out to this degree. It's just, it might have been necessary. It might have been necessary, but if we're going to, again, demonstrate how much we care about rich people and bankers and supposedly the smartest, richest people in the world, we should sure as fuck have a system that cares a little bit more about everybody else. I think that's most of what I wanted to cover. This is obviously a crypto story as well. I haven't gotten into that as much. Silicon Valley Bank allowed, I believe, some crypto banking, not to the same extent as Signature Bank in New York and Silvergate down in San Diego. Apparently, all three of them going under means a real gap in Silvergate went under, I think, at some point over the past month. Signature and Silicon Valley were both wrapped up this weekend. There's apparently this big gap. There no longer is a crypto bank, like a bank that's willing to sort of cross the lines between crypto and the financial system, to which I can only say good. A lot of the funders, a lot of the founders, a lot of the companies, the startup companies that were saved, by this deposit bailout, like that they probably didn't need, are companies that deal with crypto nonsense. Specifically, I think it was the second largest stable coin. Is it USDC, run by Circle? Had like a billion, not a billion. Could they? I mean, they had a lot of their reserves in Silicon Valley Bank, which is kind of ridiculous. But anyway, so yeah, I haven't talked about crypto much, but this is very much a crypto story, and f that. Anyway, okay, cool. I think that is what I have to say. The presentation I had to make. Sorry if folks feel a little betrayed that it wasn't so Saudi Arabia heavy, but hey, it got me more viewers than I've recently had on these live chats. So maybe it was cheating, but I don't feel that bad. So have folks got questions? There are some ties with stablecoins. Yes, a huge tie with stablecoin. It was funny on one of my WhatsApp lists yesterday. Folks were talking about, oh, well, look, Bitcoin's up massively today. And it was like, yeah, Bitcoin's up massively today because this bailout saved the second biggest Bitcoin-related stablecoin. We also bailed out crypto on Sunday. It's kind of ridiculous. All things will make the actual crash when it happens much, much worse. The reach trying to avoid pain will make it more painful for everyone eventually. So Marlon Brian Nunez makes a great point. All these things will make the actual crash when it happens much, much worse. The reach trying to avoid pain will make it much more painful for everyone eventually. I think that's almost certainly true. What is interesting, though, is that switch on to the Federal Reserve. Like the fact that rates are so much higher now is kind of a huge break, or like a huge step away from that narrative. The fact that a lot of people are surprised, I argue most people are surprised that the Federal Reserve was able to get to a point where it was actually paying money to borrow again. Sorry, it's the Treasury that pays the money. I have trouble dividing that up in my own head half the time. According to a lot of the doomsayers and a lot of the most persuasive folks who are most down on the U.S. and world economy over the past 15 years, the serious problem was negative interest rates, was the fact that the economy just didn't function the way that it was supposed to be because nobody knew the price of money because of money printing and 0% interest rates, this, that, and the other thing. That problem is in the process of being resolved. I think I saw something about major bank recommendations. They are split as to what's going to happen over the next at the next Fed Reserve meeting. Some people think they're just going to keep on hiking as they were going to hike before these bank failures. Some people think they're just going to maintain it flat. Some people think they're going to go down a quarter point. But generally speaking, I think nobody expects what happened in 2019 to happen now. Nobody expects they're going to crash down to zero or whatnot. In part, this overgenerous bailout might have been a way to ensure on the part of the Federal Reserve that they could keep hiking. Just choices that they're making. So I think that while I 100% agree this generosity, this bailout culture is going to make things worse eventually, because eventually this house of cards is guaranteed to fall apart, whether it's in my lifetime or somebody's grandkids' lifetimes or in 100 years or next week, who knows. But I do think it's worth pointing out that there's serious progress. There's serious, according to the metrics of a lot of doomsayers, the U.S. government is doing some of the things that it needs to do to get back to a more sane economy with this interest rate rise. Local Extreme asks, Peter Thiel is a piece of shit, but isn't it his money and he has the right to pull out his money? No. put bluntly. If you're an investor, if you are an investor and you so there's a couple different questions here. Like, does Peter Thiel have a right to his money? If you put your money in a bank that is untrustworthy and does stupid things, if you have under $250,000 in that bank, the federal government has decided that you deserve your money. But if you are Peter Thiel, who is like one of the most sophisticated and wealthiest, sophisticated investors on the planet, one of the wealthiest people on the planet, you should not be able to institute a bank run. It wasn't his money; it was everybody's money. It was the definition of calling fire in a crowded theater. And to be clear, he is legally allowed to do that, and that's what he did. But this idea that because of his actions, he destroyed this bank, and then the federal government is going to come in and make sure that he took no ramifications from the destruction of that bank, it doesn't sit right with me. Definitely clickbait. With the increase in interest rates, where do you see recession coming on? The British economy is already in havoc. How bad can it get? Will the India post-COVID boom slow down? Recession should come everywhere. People have expected and predicted recession in the United States since the first Federal Reserve interest rate hike, and it just keeps not happening. They don't quite come out and explicitly say it. I think they do explicitly say it on unemployment. But the Federal Reserve is trying to engineer a recession. And that's the real problem of these activities, is that the U.S. economy is proving almost shockingly resilient and is able to put up with these interest rate hikes to a much higher degree than has been expected. But the U.S. economy is much stronger and more durable than any other economy in the world. So that's a real problem. Yes, India had a good year. China has had a good opening since getting rid of COVID-0. That's a plus. But for most economies, certainly the United Kingdom, as you mentioned, and Europe in general, it has not been a great year. It's been a kind of meager year. And with the interest rates needing to do what they're doing in all of their countries for all of the purposes, it's not just every government, what they loan money out at. It's I think a huge issue is mortgage rates in the United Kingdom. The United States, I didn't realize, we're fairly unique in that we have fixed rates. One of the great scandals of 2008 was that we loaned out so many mortgages at floating rates that were really damaging for folks. But it's just normal. It is just normal in the, It is just normal in the United Kingdom for mortgage rates to float. And interest rates have been very low for a decade or so in the United Kingdom as well, so folks just sort of assumed that those rates would stay low. So now all of a sudden, people who had thought they owned their homes now have to pay a lot more money every month to hold on to their homes. So yeah, there's a lot. I'm sorry if I keep drifting off into tangents when I talk about this, but it's incredibly important stuff. Christopher Murtaugh says, no question, just want to agree to the sentiment, Ari, investing in other than tech bros. I'm 20 plus years in this domain, and it's full of sociopaths who would disrupt their mom into bankruptcy for a dollar exit. Thanks for the insight, Rob. It is quite atrocious what these venture capital folks did. They are incredibly wealthy. They had a house bank, more or less, a bank that focused on serving them primarily. No doubt they're very interlocked business relationships, board memberships. I spent a little while just looking at Roku, trying to find so Roku famously it's a very big business. I'm not sure if it's still a startup or not. If it is, it's probably a unicorn. Or if it's a public company. It famously had something like $250 million at Silicon Valley Bank in like cash that was in danger of risking. So I looked into it, and this is just sort of the nature of capitalism today. I looked into its ownership structure, and obviously it's Vanguard, BlackRock, State Street, a bunch of other huge fund managers. And then I was looking for Saudi ownership because it would really have made this a better piece. But like it was just you go there and you're like, oh, what is that? Who's that owned by? Oh, that is owned by Vanguard and BlackRock and a bunch of other people. So it's just this sort of interlocked mess that is the people who own all these companies. So the venture capitalists could have easily saved, probably with the pocket change, not the pocket change, but like with a serious effort, with the amount of money that Silicon Valley was looking to fund itself to fix that hole from selling those debt securities was $2 billion. $2 billion. This is the same set of assholes that put together $44 billion for their buddy Elon Musk to buy Twitter and run it into the ground, essentially as a joke. They could find $44 billion for that, but they couldn't scrape together $2 billion to keep their hometown bank going. It's just incredibly selfish and short-sighted behavior. These are not good people, which is sad. Questions. They had a fiduciary responsibility to pull out of SVB. Well, that's debatable, Jack, but they created the problem. And they was well within their wherewithal to stop the problem. Amir says goodbye and glory to Ukraine. Roku is still, of course, Roku is still around. Even if Roku went out of business, the service would continue. Someone else would purchase it. But they are out of danger. They are probably the largest single beneficiary of the Sunday bailout. China also invests heavily into Silicon Valley. Less so than they used to. That's for fucking sure. Over-financialization is really a cancer. I agree. To be fair, Malta says, to be fair, Musk buying Twitter was a really funny joke. Suppose so. Aaron asks, do you think many people will keep transferring huge amounts of money to Bitcoin? I don't think so, no. I think that Bitcoin is going to continue existing because there are enough people who are invested in it. I own some Bitcoin that I haven't. I should probably open up my Coinbase account again because I can't remember, can't quite remember where it was. But like, yeah, I think there's a lot of people who are just going to hold on to Bitcoin because people made a lot of money on it, and it's worth holding on to that as a lottery ticket. But no, I don't think. I think this is really, certainly the past weekend has been really, really bad for crypto. Really bad for crypto. As is pointed out, without Silicon Valley, without Signature Bank, without Silvergate, a lot of institutional money doesn't have. It's harder for them to access the crypto space. There's definitely more bankruptcies to come in the crypto space. I think that when things started crashing, when the crypto winter began in 2021, folks were like, "Oh well, we've done this before. We'll be back." The last cycle before the last one was in 2017. There was a huge spike, and then by 2020, there was a huge crypto spike. So that's like a 3-year center. So we had the 2020 to 2021 crypto spike, and now it's just spent 2 or 3 years just sort of hovering at that 16 to 20,000 mark with Bitcoin, and a lot of other stuff has gone down to zero. In a mere 9 months' time, it'll be about time for that next spike, right? Just 3 years later. And then as we go through 2024, maybe that spike just won't come, and then in 2025, and then it'll just continue to not come. And I think that's probably the whimpering death of crypto. It's possible that somebody will come up with something useful to do with all this crap. That is not something that has happened recently. I do think that the loss of those banks is an important loss for crypto. And it's not going to go down to zero, but it's not going to go much higher. Yeah, crypto's up 7% today, which is 27% over the past 5 days, which is kind of fucking hilarious. I don't know why it's up that much. So over 6 months, it's up 28%. Over 1 year, it's still down 35%. That's. I don't know why it's up as much as it has been over the past 5 days. That's a lot. I expect it to continue to go down further. If American Psycho was made today, it would be set in Silicon Valley instead of Wall Street. I think that's probably true. Jack Hawkins says SVB bought long-term notes with demand deposits, then the market of the treasuries tanked. SVB was insolvent. I'm not entirely certain that's true, Jack, but maybe it is. Should Ukraine try and retake Crimea? No. I think that'd be a bad idea. How will higher interest rates affect Russia's sanction-riddled economy? Well, Russia's already been sort of... That's a very complicated question, Loga. I think that a very straightforward way that higher interest rates have already affected the Russian economy is that they've crushed world petroleum prices. Like, I was just looking at it today. Maybe oil prices are falling because they're almost 3% today. So WTI and Brent are in the 70s. I think last June they hit 120. And especially if you consider the fact that we've got ongoing dollar inflation. I mean, this is like the equivalent of the 40s or 50s 10 years ago. So oil prices are dog shit, and a lot of that has to do with the hikes. 100%. The rise in interest rates has... I mean, can you imagine what state the U.S. economy would be in if we hadn't spent the past year raising interest rates? It's a testament to the incredible strength of the U.S. economy that it is continuing to grow, that unemployment is continuing to fall in the face of these rising interest rates. But that economic strangulation has definitely helped to tank world oil prices, and that's real bad for Russia. If things continued to look the way they looked in June and July of last year, that would be worse for Ukraine. That definitely affects Russia's sanction-riddled economy. As far as the more direct effects, Russia has, since 2014 and certainly since February 2022, become progressively more and more isolated from the world economy in general. And what Russia is, this is a big Zion point, but I do think it's accurate. What Russia is that China is not is a largely self-sufficient economy with respect to a lot of really important goods. Maybe they don't have the chips they need or whatever, but in the final analysis, they'll always have all the energy they need, and they'll always have all the food that they will need, because they're large exporters of both. So Russia is less vulnerable to a range of things. There was a long read that people were recommending that I did not make it through about how, is it Najibullah or something? The woman who runs essentially the Russian Federal Reserve or Russian Central Bank apparently has done an extraordinary job over the past year or so keeping the Russian economy going. So Russia has more... that's part of the reason why we're so we've been so interested for the past 20 years in making sure that Russia and Europe can't unite. This is why we've spent so much time and money and weapons cultivating Ukraine, is just that old-fashioned Halford Mackinder fear of a united Eurasia. And Russia, despite how basket case its economy is and the corruption and the nightmarishness, had a lot of attributes that in combination with European attributes could have made a real world-beating power, real competition to the United States. So Russia is almost uniquely well-suited to independence and real sovereignty in the way that really no other country in the world other than the United States has that capacity, which is why we've worked so hard to crush it successfully over the past 20 years. So North Korea also doesn't have a lot of exposure to interest rate problems in their own economy because of how they've structured their economy. I think Russia is a more successful version of that. If Russia is so sanctioned, then how come it's doing better than expected in Ukraine? I think I just explained why Russia is doing better than expected in Ukraine, because it is a more self-sufficient place. Because it is a more self-sufficient place. I'm sorry, what was I talking about? Sorry, I'm trying to understand interactions here. But how come for us it's the same? So I would not argue that it's doing better than expected in Ukraine. I would argue it's doing terribly. I think that's pretty clear to me. Let's see. Christopher Murtaugh, that is a large and generous super chat. Thank you so much. As folks know that if you super chat, I'm sure to answer your question and spend a fair amount of time on it. Have you seen real life lores why Ukraine retaking Crimea will destroy Russia? I think, I agree. The most likely stable outcome would be an independent demilitarized Crimea. Not likely, though. I've always believed and been pretty straightforward about it, that on February 2022, we passed into a new era of much higher danger of nuclear annihilation. I know that's seen as defeatist or appeaser to believe that, but I think those are just the facts. I think there's a generalized consensus that Russia's probably not going to risk nuclear war for the territories they've retaken. I think there's some question of whether they'd even bother risking nuclear war for Donetsk and Luhansk. I think most are pretty confident. I don't want to overstate the confidence, but it seems even more enough likely to get even war hawks at the Washington Post or New York Times or the Pentagon really think it's possible that Russia would use nukes to defend Crimea. There's also the small matter of yes, obviously the referendum was fake. The Crimea referendum was fake. That's definitely true, but it wasn't that fake, seems to be the consensus. It seems like there's a lot of people in Crimea who'd prefer to stay with Russia. So there's that very large stumbling block. There's also the real chance of the end of human civilization if Ukraine takes back Crimea. So I think there's really large questions. Recent reporting has sort of indicated the Ukrainians are getting pretty tired of this shit. I hope that the Ukrainian counteroffensive that should be starting now is super successful, but I don't think that they can, and I don't think that they should take back Crimea. I don't think that the United States is interested in funding or arming that, and I think that's quite sensible. Sure, an independent demilitarized Crimea sounds great, but it's not going to happen. I don't see that as likely. What do you think of the massive protests in Israel, Rob? I don't know, man. Israel makes me sad, so I tend to avoid it. I think it is fascinating. I had a conversation with a good friend of mine who's got some he's of Jewish descent, so he's got some interest in the issue. But he's sort of like, well, and I guess this might be something that is put around in some not particularly attentive Jewish American communities, just sort of talking about how, the young people in Israel, they really care about the two-state solution or this, that, and the other thing. When I've seen a lot of folks, friends of mine who's actually lived there, and I think actual polling indicating that actually Israel's getting a lot less interested in the two-state solution as they get younger. And I think that it's easy to get hopeful about these protests and be like, oh, well, these are my sense of the protests in Israel is that these are the folks who believed in the two-state solution, and they are not the folks who are in power in Israel or are going to be in power in Israel. I don't see them as Israel's future. I see them as Israel's past. I would love it if they were Israel's future. I would love it if we had some return to the 1990s where saner, more progressive elements had serious power in Israel. But that's not how I see Israel trending. I'm really pessimistic about Israel. I'm really pessimistic about what this means for Israel's treatment of the Palestinians. So I don't talk about it much, and I'll continue to not talk about it much. What do you think? How will the Ukraine war end? I think the chances of a long-term stagnation are pretty high. I think since last fall, I've been talking about it as similar to the Iran-Iraq war, which was launched as a war of territorial aggression launched by Iraq. It sort of quickly failed to meet his aims. And then Iran, did Iran actually manage to take some parts of Iraq? Is that how badly Saddam Hussein screwed up? But then it just sort of solidified into a horrific World War II style conflict. And I think a horrific World War I style conflict, a war of just sort of slow, grinding, horrific movement. And I think that's what we're going to see in Ukraine over the next year. I think there's been a lot of talk about offensives, both by Russia and by Ukraine. I don't expect to see... I wouldn't be shocked. I'm not saying this is definitely the case, but I wouldn't be shocked if the big Kherson and Kharkiv collapses are like the last serious movement we'll see in this war. Who knows? Maybe one of the offensives, as we speak, is making a big difference one way or the other. I don't think the fall of Bakhmut, has that happened or not? Finally, makes too much difference. I don't think it's at all comparable or on the same scale as Ukrainian victories in Kharkiv and Kherson. Who knows? Maybe that'll really make a huge difference. But it seems like Bakhmut has just been exhausting for the Russians and for Wagner. I think that the chances are pretty high of just depressing as stagnation. Loga says, Rob, you've recently spoken out against Vivek Ramaswamy and his foreign policy of invading Mexico. Why are you against people of color making their mark in American politics? Well, I guess it's probably just my deep-dyed racism, Loga. Like most progressive, New York progressives, I'm scrupulously politically correct, but when it comes down to it, I'm all about white supremacy. It's subconscious. It's just natural. I'm joking, mostly. Vivek Ramaswamy that guy's I don't need to talk about him too much because I don't think he's going to go very far, but he's like a hedge fund guy or something. Is he even like a tech investor? Is he one of these, essentially very akin to one of these nasty venture capitalists I've been complaining about? American entrepreneur, author, and conservative political activist. The author of Woke Inc. Jesus. But what did he do? What did he found? Jesuit. Graduated in 2003. This guy's 5 years younger than I am. That makes me sad. Graduated from Harvard. Biology. Campus Venture Network, a tech company that provides software and networking resources to university entrepreneurs. Company was purchased by a foundation. QVT Financial. So he's a hedge fund guy basically. Partner and co-managed the firm's biotech portfolio while attending law school. He founded a pharma company. Anyway, so very accomplished guy, has decided to make it in Republican politics, specifically by, this seems reductive or maybe a little racist, but by being a person of color who's talking loudly about how bad wokeness is and this, that, and the other thing. And he's got a lot of really, really dumb ideas. It's like, he'd really be very at home in the Bush administration. Apparently his big things are libertarianism, supposedly, a certain kind of libertarianism. A certain kind of libertarianism that allows also for invading neighbors. So it just seems kind of insane to me, and not somebody to be taken particularly seriously or talked about very much. Do you have any plans to make a video about Pakistan's economic crisis? Not currently, no. I've got a Peter Zeihan video I want to finish before the month is out, and then I gotta go write a book. But yeah, once I get the Zeihan thing out, I'll probably be looking for a next video to do. That doesn't take a ton of research. And I think if I probably spent an afternoon looking into Pakistan, I could think of a few things to say. But maybe I'll consider that one. Halbert says Iraq was able to retake the Al-Fa Peninsula while expelling all Iranian forces at the end of the war. Thank you. That was exactly what it was. So Iraq invaded Iran. Iran was able to push back and actually take Iraqi territory. And then because of the intervention of the U.S. Navy that we never talk about, coming in fully on Iraq's side just 2 or 3 years before the United States would crush the Iraqi army in the first Gulf War, supposed first Gulf War, the Iraqis were able to push the Iranians back out. At the current rate of spending, Iraq will run out of money in a couple of years if oil stays above $70, which is unlikely. I don't expect oil to stay over $70. It's really shocking when you consider how disrupted the oil and gas industry has become over the past year or so, and then it's just hovering in the 70s. I wonder what that is in inflation adjusted. I should look that up. It's funny. I think oilprice.com used to give years worth of data, but now they won't anymore to people who don't pay for it, which is okay. Find that somewhere else. Butthead, no. Do you feel that South Africa will stay unified? And if so, how will they deal with internal issues? I have not made a close study of South Africa. I do know that it's not. We had high hopes for Cyril Ramaphosa. Is that his name? Who has certainly proven to be not as much of an asshole as Jacob Zuma. But that's a really, really low bar. And apparently there's some fairly serious corruption stuff with him as well, though, again, nothing on the same scale as the last guy. South Africa is... I think like a lot of places, probably being somewhat poorly served by the current libertarian focus, anti-government focus. I mean, if you think of a country that desperately needs government to redress the evils of the apartheid era, to crush the crime, to just deal with economic inequality, South Africa would certainly be a country in desperate need of government. Yet, for the entire period of its real independence since 1994, when did the apartheid system end? It's dealt with this sort of worldwide ecosystem or sense of the way that countries should be run, which is business first, greed, as long as the shareholders are happy, I'm sure everything will work out for the country. This has been damaging in countries like the United States and China that have serious histories of institutional weight and functioning. In South Africa, where they had to really build all of that for the first time in the 90s, or rather build it out from a germ of a system that was supposed to that mostly look out for white people, and then turn that into a system that was going to look out for everybody. So basically going from like a Rhode Island-sized social welfare state to a California-sized social welfare state. More than that, what's the South African population? And to have to do that, it's 50 to 9 million, so that's even more than California. It's about 10, 15 million more people in California. So to have to do that in the context of like a worldwide Weltanschauung of hyper-capitalism and, don't trust the government, obviously it's been falling down. But yeah, I haven't made a huge study of South Africa. I do know that incredibly corrupt business folks have squandered a lot of the wealth of that country. Will you make a video over Israel and Palestine? No. I did a live chat about a year and a half ago. You can find it under the live. It's fairly easy if you just click on live and go down, sort of talking about how Israel doesn't need the United States anymore. I said some of the incredibly grim things that I expect for Israel. I don't talk about Palestine much, not because I don't think they have a real cause or real grievances. I just think they've lost. They're going to lose. They're going to lose worse. Really horrible things are going to happen to the Palestinians that stay there. I talk about that at some length in that Israel video. And it's the last I want to talk about it because it's really depressing. KKK, thank you for your super chat. Generous super chat, thank you. The problem, if there is a bank run, all the regional banks will be decimated and only will remain the big four. I don't know which is better. Just trying to understand with others' views. Thanks. So that's the question. Was there going to be a bank run? I don't know. It does seem like the risk. So First Republic is a sort of, the general sense is that was the one that was most likely to fall next, my bank. It looks pretty safe now. I mean, the stock has gone from, had fallen from $100 to $19, and now it's back up in the 40s. It seems a lot safer. Is that because of the bailout? Yes, definitely to some extent. But was it necessary? I don't know. And I think that a lot of the people who benefited from this were on Twitter creating, and no doubt working behind the scenes to create the panic that they benefited from to be made whole. So, I don't know. Maybe it was the right thing to do. But it certainly is grim to see these folks being given handouts. There's definitely a benefit to diversity in banking, as there is in any other economic activity. If we only had the too big to fail banks to deal with, service would just plummet. It would be a bad situation. It's an interesting question. Hypocrite. Well, yes. What about Saudi-Iran developments? Why are you avoiding? I'm not avoiding it. There's just not real developments. I think I did. Didn't I have a short this morning about it? It's been well established that since 2019, when the Abqaiq refinery was blown up, like roughly half of Saudi Arabia's oil production capacity was taken offline for a couple days by an Iranian attack. And finally, the morons in Saudi Arabia realized that, oh, wait a second, if there's actually a war between the United States and Iran, we're not going to have an oil industry anymore. They've been working quite closely since 2019. They've been working steadily towards some kind of settlement with Iran. That settlement has emphatically not been reached. They have all the current problems. There's, the Sunni populations in Iran that the Saudis see as being abused. There's the Shia populations in Saudi Arabia that are definitely being abused by Saudi Arabia. There's the regional competition. What we're doing is we're getting back to 2017, where they had diplomatic representation. I think people are really, really making a lot out of the fact that they're reopening some embassies that were open from 1979 when this rivalry kicked off until 2017, where the rivalry hit a new level. I don't want to dismiss this entirely. It's super important that embassies, that countries have embassies in other countries, that there are lines of communication. That's great. I think that China was largely invited in at this point to give Saudi Arabia another opportunity to thumb its nose at the United States. And, good for them, whatever. I just don't care much one or the other way. Yeah, it's not new. You look bored. I'm not bored. I'm having fun. This is not boring. This is great. Oh dear. Unlicensed Milkman says he has to go. The cat crapped on the floor. What type of reforms should the U.S. take on banks in the country? Damn, man, that's an incredibly complicated question that I am not at all adequately. I mean, I hope that I provided a reasonable facsimile of somebody who had some idea of what they were talking about when it came to banks and crises, but that's mostly a form of high-end parroting and regurgitating what I'd known elsewhere. There was a time in my life when I did have a higher knowledge of the intricacies of some of these things, but that's the problem with banking, is it's just such a fiendishly complex thing. It's interesting. It's fascinating. I've spent the past 3 or 4 days just sort of swimming. Maybe that's why I look bored. I'm just a little tired. Just been swimming in a whole new realm of information, and I've attempted to convey some of that in this presentation. I hope I did an adequate job. But yeah, the idea of actually being oh, well, obviously what we need is, I don't know. For the longest time, I was we need to break up the big banks. And I still do think that'd be the right thing to do. The problem, of course, is now they are systemically important, and they have survived a number of crises. So yeah, I think obviously breaking up the big banks somehow is the right thing to do, but how do you do that? I don't know, man. Yeah, I can't speak to that with any seriousness. Wash your hands after Milkman. Saudi is an Israel vassal state, so Saudi-Iran peace treaty is also de facto Iran-Israel peace treaty. Yeah, it's ridiculous, and there's no peace treaty. They opened embassies in each other's districts. There's no peace treaty here. It's quite silly the way people are talking about this. Who are those global powers that can form a military alliance against China? I mean, it's just the U.S. And, well, I mean, the Philippines essentially just threw in with the U.S. Australia, I mean, Japan. Korea and Japan have settled one of their... it's not a competition. I'm a little nonplussed by the question, and it's I'm beginning to wonder if most commentators see reality in the slightest. China is losing on every imaginable front. And that wasn't the case during the Trump administration because Trump didn't have allies. Trump didn't actually... Trump alienated everybody. But the United States over the past 2 years has... And I don't think these are good things to do or necessary things to do. They just make it laughable, this idea that China has any kind of real physical threat to impose anywhere beyond Taiwan. And honestly, probably not on Taiwan either. China got a very ambiguous security treaty in the Solomon Islands to retaliate against the United States opening nuclear submarine bases on Australian soil and signing a deal with Australia to pay for a new fleet of nuclear submarines. That's fucking nothing. And then because, I think in part because people were angry about the Solomon Islands thing, the United States inked new deals with the Philippines to I think there's some weirdness about, there can't be permanent staff or something according to the Philippine Constitution. But regardless, the United States has access and is, to bases in the Philippines that are now going to be the home base for any conflict against China. It's just the question is like, who's going to ally against China with the United States? Everybody. Like everybody. Like China doesn't have any real friends here, except for Russia, which China has signally failed to back up in its project. So yeah, no, I don't. It's not a serious question. Saudi Arabia and Iran had good relations in the early 2000s prior to the Iraq. Did they? I mean, did they? Maybe they did. So that's Khatami. Yeah, there was. So before Rouhani, the reformist Iranian president who got his mouth pissed in by Donald Trump. There was in the late 90s and early aughts, there was another reformist Iranian president, Khatami, who also made all kinds of overtures that were refused. So yeah, that doesn't surprise me that Khatami had better relationship with Saudi Arabia than they did when Saudi Arabia was bankrolling Iraq to try to destroy Iran. But yeah. Local Extreme, in your Saudi Arabia's finished thesis, at what point did Saudi Arabia pass the threshold of no return? Oh, that's a great question. The 70s, maybe? Becoming as absurdly dependent on fossil fuel sources that will be pumped for the rest of the century for sure. Well, if humanity survives. But are not going to be as important a part of the economic mix in the decades to come as it has been since the 1970s. So that'd be the point of no return, probably, is just when the economy became so uniformly dependent on oil and gas resources. Maybe make Dodd-Frank apply to small and medium-sized banks. So Dodd-Frank absolutely applies to small and medium-sized banks. There is the minutia of the particular reform that or particular piece of regulation that the Trump administration rolled back after the lobbying of Silicon Valley Bank is not something that I know. I don't know what the details are. The thing is, though, so this is the problem. We have an interest. Now, obviously, the specific thing that happened in 2018 should be bounced back. Sure, okay, I don't know exactly what that was. The reason why systemically important too big to fail banks are held to this higher standard and can be held to this higher standard is because of the understanding that they're going to need to be bailed out if they fail. And also the understanding that they have really, really large resources. I think I read somewhere that there's actually a $5 million bank somewhere in this country where some guy it's like a family runs a bank that's worth with $5 million managed for their local community or something like that. There is an interest, a long-standing interest in U.S. law, and I think a very defensible public economic interest in differing approaches to banking. So if we say that every bank has to satisfy the same enormously expensive requirements that JP Morgan or Wells Fargo have to satisfy, that these systemically important large banks have to satisfy, then the only banks that will exist are systemically important large banks. So credit unions, people really love credit unions, which I believe are technically I don't know the details of this, but they are much closer to the community. They're run by people in the community. They provide better service. They are less profit focused. They're more focused on just providing goods for other people in the community or whatever. Credit unions are great. You're not. People love them. I've never signed up for one. Maybe I should. If every credit union, small bank in the country had to satisfy the legal requirements that a too big to fail bank had to satisfy, then those banks would just go out of business. Because to satisfy the enormous requirements of JP Morgan has to satisfy, you need thousands of lawyers and other compliance professionals to deal with that. Economists. I mean, I don't know what goes into a stress test, but I assume it's a lot. So you can't provide those sorts of requirements on small banks because small banks can't meet those requirements. They would have to be much bigger banks to meet those requirements. So I hope that made sense. Just calling out this Iranian troll, Angel, will do logo. What? He actually believes I'm a Shia with my Spanish name. You're a Scottish? Okay, let's spend less time arguing with each other. Cordoba will return to its rightful home. Okay, that's strange. Does anybody have any questions for me, or are we just sort of battling it out in the comments here? Fadel says, from the U.S.'s perspective, was the war on terror a success? MENA is in ruins. Countries that used to challenge the U.S. regionally to some extent are now testing ground for U.S. weapons. You can make a case from a really reductive, like, frankly, evil perspective that, like, the war on terror met some requirements for U.S. empire to expand. Like, the only story you can tell of the first part of the century is an expanding and consolidating U.S. empire at tremendous cost of blood and chaos and pointless stupidity. Just a goddamn mess, the whole thing. And it's also an extraordinarily expensive way to bring about. So, like, you have to have a very stupid, I would argue, and short-sighted and anti-humanity conception of the U.S. national interest. But if you have that conception that, oh, the world is better when the United States crushes all its enemies and is the be-all and end-all, I would argue that that's a great recipe for imperial decline. Makes the world more dangerous and more violent than it needed to be, dramatically increase the possibility of nuclear war. But if you are from the perspective, like, you know, the Robert Kagan perspective, where, oh, you know, the only thing that matters is, you know, the U.S. is the light and the hope, and, you know, the U.S. should be totally in control and all competitors should be destroyed. Yeah, I guess the war on terror worked out, you know. But as far as, like, our goals, our stated public goals, none of those were met. As far as the amount of money that we spent on it, vastly exceeded what was expected and promised, and produced essentially nothing other than blood and destruction. So yeah. A month ago, Jim Cramer argued that Silicon Valley Bank was a safe investment. Do you believe in the Cramer curse? God, I hope not. I do think that the Cramer curse probably has something to do with cherry picking. So for those who don't know, Jim Cramer is a finance talking head. I don't know if he was on CNBC, or I'm sure he's jumped around. I mean, I've been aware of Cramer. He has been a very prominent public figure around markets since at least the first tech boom in the late 90s. I've been reading and I've been aware of him for that whole period of time. And famously, he gets a lot of stuff really wrong, but also, you know, he's making a lot of stock picks. I think he makes stock picks every day, so it's easy to go back and find a clip or a tweet where he got something very wrong. He can't be wrong all the time, because if he was wrong all the time, he probably wouldn't still have a job. But it is very funny. It is a sort of a joke that I too engage in on the Twitter when you know, he has some kind of recommendation. I think a couple days back he said that J.P. Morgan is super solid, and everyone was like, "No, don't do it," because if J.P. Morgan went out of business, that's 2008 style stuff. That's get worried about U.S. empire type of things. World of Mix says Saudi Arabia is done. I agree. Do we have questions? I think 2024, presumably the U.S. presidential election, will just be a rematch of 2020. That makes me very sad, but that doesn't mean it's not right. What are the chances of war with Iran? I think they're very high. I think, yeah, with the Iran, Saudi Arabia, China thing, I am very dismissive of it, because I think that the way that people describe it is overblown. I think that it's not that big of a deal. However, it's not nothing. It does help lower tensions in the region. It does make it more embarrassing for Israel to carry out the preemptive attack that it wants to not have Saudi Arabia's backing for that. It does make Israel less likely to make that attack. It does make the United States more conscious of the optics of backing an Israeli attack while China is trying to make peace between regional actors. So yeah, I think that was a good thing. I shouldn't minimize that. I think that China and Iran and Saudi Arabia made U.S.-Iran war less likely. But I don't think they made it they didn't take it from a 75% likelihood to a 10% likelihood. They took it from a 75% likelihood to a 68% likelihood. And that's great, and we should all be grateful for it. But I don't think they've really the chances of I've been going through this weird thing over the past 3 weeks where I'm like, Jesus Christ, they want to invade Mexico? So yeah, if the United States is stupid enough to want to invade Mexico, they're certainly stupid enough to want to, the U.S. government is certainly stupid enough to want to start a war with Iran. So that remains a very strong possibility. I wouldn't go as far as likelihood, maybe the 75% is a little too high, but certainly, 50-50 in any given year. Can DeSantis beat Trump in a debate? I doubt it. Any prediction about South Asia? Not really, no. Would Europe back the USA in a war of aggression against Iran? The thing is, before February 2022, I'd say definitely not. After Russia's invasion of Ukraine, Europe has a lot less scope to complain about U.S. actions. With all the aid the U.S. is giving Ukraine, what weapons should the U.S. not give Ukraine? Well, nukes, that's for sure. I actually saw someone suggesting that recently. Will Houthis join the U.S.-Iran war if it ever takes place? That's a great question. Depends on where and how it takes place. That's a great question. I couldn't tell you, Fuad. A lot depends on a lot of things that happen. Well, that's not a very good answer. But I am fading. We've got 3 minutes left here. My name is Robert Morris. I'll keep talking if there are super chats. But my name is Robert Morris. I upload frequently at the More Freedom Foundation on YouTube. On YouTube, it is the Mo Freedom Foundation. Well, you're watching this here now, I think. You can click on the subscribe button and click the bell next to it to continue getting updates. Well, let's be honest, not often getting updates. If you want updates from me, you should sign up for my email list. Now, pretty much every produced video I make, I send out an email with that. So you should check that out. Sign up for my email list. Patreon, we do a, what's the word I'm looking for? We do a number of things for Patreons, for folks who sign up on Patreon. We've got a Discord server, which is just for the patrons. We've got a, what else? We've got presentations like this, the Patrons Only newscast that I do once a month. Yeah, I really am fading, folks. Sorry about that. I've written a book called Avoiding the British Empire. You should check that out. Any alternate currency system coming up? No. BRICS is a joke. Did Caspian Report just do a BRICS is a joke video? Oh no, What If All This, I think, did a BRICS is a joke video, and I largely agree with that. Though not the details of his video. Typically I can only watch 10 minutes of his stuff. Yeah. West Virginia is the Switzerland of America. That's an interesting, hard to see, because it's got mountains. All right, folks. It has been 2 hours, and I am falling asleep, strangely. I don't know why. But y'all are the best. Thank you all so much for being here, and have a lovely week. Thanks so much. Yes, sign up on Patreon to join the Discord. Anyway, Instagram. Robalo needs to stop smoking and drinking. Well, I do smoke cigars. That's true. But I don't drink. I haven't had a drink in... Jesus, I haven't had a drink in almost 19 years. It's crazy. Anyway, good evening all.